The correction has hit the state. Hello, everyone. Welcome back. Today, I am going to be doing a little bit something different. Instead of going through the normal housing market update for April, I'm just going to be doing a screen recording off my phone, and we're just going to be going through the numbers for the state, Central Florida, and also the Tampa Bay area, because that are the two areas that I serve. But if there's any other market that you want me to look at in the future, leave it down in the comments, and I will get back to it in the future to help you out. Let's get into it.
All right, so we're going to start with the state of Florida. Starting with closed sales, we are down 4.5% at 23,572. Cash sales were down 10.2% at 6,674. Cash sales as a percentage of closed sales were down 6% at a difference of 28.3%. Median sale price were down 4% at 412,734. Average sales price were down 0.6% at $625,070. Dollar volume, we're down 5.4% at $14.7 billion. Median percentage of original list price, we're down 1% at 95.5%. Median time to contract, we are up 22.9% at 43 days. Median time to sale, we are up 7.9% at 82 days. New pending sales, we are down 4.7% at 25,634. New listings, we are up 2.7% at 35,239. Pending inventory, we are down 7.8% at 33,812. So right there we can see the demand difference, and we're seeing the supply increasing as people are not coming into the market. And now active inventory, we are up 33.3% at 117,046 units. And the months of supply, we are up 36.6% at 5.6 months. So we are getting ever so closer to a buyer's market. We are more of in a balanced market, and that is what it's going to take for us to get some price corrections. So we will see in the future how much further we move into a buyer's market, and I'm sure we will be moving into that in the future.
All right, now let's get into the Tampa and St. Pete Clearwater area, the other area that I serve here. My main area, closed sales were down negative 2% to 3,669. Cash sales were up 3.7% at 969. Cash sales as a percentage of closed sales are up 6% at 26.4%. And I'm sure that is going to be more of the investors coming in and getting the distressed properties from the hurricanes and other natural disasters compared to Central Florida. Median sale price, again, those higher cash sales are going to drive the median sales price down. So we are down 4.3% year on year at $400,000 flat. Average sales price, we are down 6.9% at $500,406. Dollar volume, we are at negative 0.8% year over year at $1.8 billion. Median percent of original list price, we are down 0.6%. So sellers are getting 96.5% of their original asking price. Median time to contract, we are up 17.9% at 33 days. And the median time to sale, we are up 7.5% to 72 days. New pending sales, we are down 1.9% at 3,877. New listings, we are up 10.1% at 5,587. Pending inventory, we are down 5.4% at 5,000 units flat. Active inventory, we are up 37.8% at 13,806. And months of supply, we are up 40% at 4.2 months of supply. So the market is continuing to shift in the buyer's favor, more into a balanced market, but we are not in a buyer's market yet. All right, so now let's get into Orlando, Kissimmee, Sanford, Central Florida markets. We are down 3.4% year on year on closed sales to just over 2,600. Cash sales were down negative 11.6% at 557. Cash sales as a percentage of closed sales were down 8.6%. That's a difference of 21.3%. Median sales price, we're down 1.5% to $443,098. Average sales price, we are down 0.8% at $544,009. Dollar volume is decreasing, negative 4.2% at $1.4 billion. Median percent of original list price, they're down 0.8% of what they're asking year over year. So now they're getting 96.9% of their asking price. Median time to sale, they are up 8.7% to 75 days. New pending sales, 2.3% at 2,839. New listings up 7.2% at 38, just under 3,900 units. Pending inventory, that is down 1.3% to 3,707. Active inventory up 39.9%, and they are at 10,099 units. Months of supply, again, shifting into a more balanced market in the favor of the buyers, up 43.3%, 4.3 months of supply. So everything is going in the direction that I have said it's been going to be going. If you don't know, because I haven't really mentioned this before, but I did predict this back in about actually after Ian hit, that we were going to start having a housing market shift. My timing was off. I will admit that. I did think it was going to happen sooner, but my call was that the insurance and the property taxes were going to be an issue moving forward into the Florida housing market. And it has. I said that right after Ian. Of course, I didn't have a platform to say that. I hadn't even got my real estate license yet. I was still living in Michigan at that point. But, it's one of those things where you see two very expensive cars. This is what I saw, actually. I saw two very expensive cars go underwater, and the value of those was $1.5 million. And that probably was the value of the home, and that home was damaged. So, I was like, yeah, they're going to have an insurance problem, and there's going to be some sort of correction in that market. And I said, I'm probably, like I said, negative 20% return to the mean. And that's going to vary between markets. Punta Gorda, they're already down almost 17%. And other markets like Tallahassee, they're still continuing to grow in price. So keep that in mind. Make sure you know your local housing market. If you don't, find yourself someone who does, like myself, who is trying to help you guys either get the best deal possible or sell your home at the most appropriate price possible for the current conditions that we're at. Currently, my listing right now at the townhouse, we have been on the market for about 20 days right now, and we had to do a price drop, $5,000. Not that it was necessary, but it was more of just being able to have my customer move on and try to get their life on the road and into their new home. So there's just, again, depending on the life situation, things will vary. But what the next thing I want to talk about is the housing crash up. And no one is talking about this, so I want to be the first one because I didn't get to do the call on the correction because I didn't have a platform. But if you're my friend, my family, anyone who worked around me that was my mentor, I explained to her what I saw coming. And this was, again, when I got newly licensed in February of 23. And now we're here. So I want to call this one early because I want to have the platform to let you guys know what I'm thinking about. And so that way you can make a better decision moving into the future. So let's talk about the housing crash up in Florida. So as you all know, I'm sure if you've been following the condo market, we've been having sort of an issue. We've been having an issue with the reassessments, the HOA reassessments, the monthly payments, and that is causing a lot of disturbance in that market. So did you know that there is 1.5 million people who live in condos just in the state of Florida? So I want you guys to think about that. Did you know that there's actually less than 1 million houses in the entire country? So that is a very small amount of supply to have to be absorbed if people in the condo market here in Florida were to be displaced. Less than 1 million houses in the entire country right now available for sale. So think about that. If those people had to leave all at once, the entire country's inventory would be absorbed. So going back to the housing shortage, and this is why I think that the new builders are still building. I just visited a community in Lake Hamilton. They're putting a new community up, 3,800 homes. And I think that the builders, if this crisis in the condo market doesn't get resolved, we are going to need a lot of housing. And let's just say even half of those people, let's just say even a third of those people, let's say 500,000 of them are displaced, unfortunately. And now we are going to need those units. So what's going to happen? Let's just say, again, 1 million people leave, they unfortunately get displaced, and now they have to find a new home. And let's just say half of those people decide to leave the state, because I would imagine that is devastating, right? So now we have 500,000 people right now who need a house. So let's do the numbers as we think about this, right? If we have 500,000 people who need a home and we don't have that, the entire state, every unit on the market, whether it's a townhouse or a single family home, will be absorbed. And I know and I said this before, like there's going to be a pricing correction. And, now we're finally here. Outside of the insurance and the property tax issue was also going to be the reinstatement of forbearance payments. For example, the student loans, those are now kicking in and readjusting credit scores in a heavily big manner, and people are getting a 150-point reduction on those payments, on their credit score, because of those payments. And so that is going to decrease demand. So that is going to flow through the system until there is some sort of equilibrium or some sort of program that maybe pushes it back. We don't know, but that is a big amount of money that is going to be leaving the economy and going to drive things and demand for not just housing, but services, products together. There's just going to be a lot of different things that are going to happen. So back to my point is, when will that happen? We don't know, because I know the governor right now, they're working on a bill to postpone those reassessment payments a year down the road. And I don't know if that's passed yet, but I know it's in the works. So if that's in the works and we got a year in the back, that drives to 26, and then maybe 27, 28, 29, 30. There's a lot of different variables, and also foreclosures, if those come on the rise because of the forbearance loans and people not being able to afford to make their payments, whether it's job loss or the reassessment of just their cost of living, that could make foreclosures go up as well. So that could also increase inventory into the market. So those are the things that I'm considering right now. Obviously, as we come into this, as we go through this correction mode and see, where we trough at, where we start making that bottom slope on the way back up. Definitely, probably the later 20s, early 30s is my guess. But anything can happen because there's constantly different sorts of programs or government assistance or government laws that are put in place in order to hold these things off. But that's how far ahead I think. So since I called the correction correctly, my timing wasn't right, but that was only because, again, the federal student loans were getting pushed down the road, even though they said they were going to reinstate them multiple times. And that was, again, to me, another trigger, if you will, that's going to readjust the housing market and also the economy in general, because now you're sucking out a lot of dollars and slowing down the velocity of money in the economy so people can keep that same pace of spending going. So those are just some things that I want you guys to think in mind as you're planning on either buying your house, selling your house, making a different move, maybe out of state into the state. Maybe you're a renter right now and you're thinking about sitting tight. Just keep close attention to what's going on. Keep close attention to what I'm saying. I have been correct on that, and I had called that even before a lot of the housing crash channels even mentioned it, until probably about a year ago. I think I started noticing, maybe late 23 is when they started talking about that. So I was a whole year or two ahead of them. So I'm gonna take my little, I wouldn't call it your walk of pride or whatever you call that. It's just one of those things where if you can see into the future what's happening and how, and understanding money and understanding how money works and credit and all that, you have a pretty good idea of where things can move. And again, anything can change. There's going to be a lot of different programs that offset that. But I'm going to take my victory lap on that one. There you go. That's the word I was looking for, the phrase I was looking for. My victory lap on that one. But I do hope that everyone does make it out as safe and as prosperous as possible, because I do not want to see people lose their homes, guys. That is not something that I'm hoping for. These are just things that, I try to project, to plan, to, move accordingly to the situations that I could be, or you could be, dealing with in the future. So if you like this, please like and subscribe. Leave a comment down below if you want me to cover your zip code. And also, if you're looking to buy or sell, obviously I'm here for you guys for that. And my phone number is 407-801-1661. Or, just put a comment and put a comment down below, and I'll reach out to you. Let me know how you would like me to reach you, and we will go from there. So I hope you guys found this worth of value. Again, please like and subscribe. Moving forward, I am going to be doing shorter housing market update videos because, um, although while I'm very nerdy with the data, not a lot of people are. And so I'm not going to spend so much time on those videos anymore like I used to, unless you give me a call and we have a sit down and we have a chat about what I think will be going on in the market. So I hope you guys have a great weekend. Take care, and we will catch you guys on the next video.